Everybody, hope you guys are all having a fantastic day today. We're going to be talking about swing trading setup, strategies, everything you guys need to get started with swing trading. So I hope you guys all enjoyed this. If you guys do, hit that like button, subscribe, and if you guys want to learn more about swing trading in the market, check out our school. We got private live streams, quizzes, lectures, a group chat, everything. More importantly, we teach you how to find some of these stocks that we're going to be talking about today, and we're offering a crazy sale, 47% off, which is insane. But the only reason why I'm doing this sale is because the Detroit Lions won 47-9, and I'm a huge Lions fan. I'm actually from Michigan, so make sure you guys check it out. You guys can use code Lions to get 47% off. So click that link, sign up. I'll see you guys in there, and let's get started here. So let's break this down here. So right now we're holding three positions. We're holding two decently heavy, one small position. Now the thought process behind this, right, it's very simple. Anytime I place a trade here, I make sure it follows my trading setup, my trading strategy. So it's very simple. We'll go through it real quick, and then we'll go ahead and answer your question, Bone, about Microsoft here. So you guys can see here, stock has this great upward trend, sold off down to this trend line. Trend lines are very, very, very important. They act as support. They act as resistance. When the stock is above it, it's often as a support line. Now, we also have this moving average line. So if I was just starting out, I would focus on drawing trend lines and working on moving average setup. So you guys can see here with this trade here, we have two supports. We have a moving average line and a trend line. So now you have a higher indication of getting better buying pressure, because we could see that move, going up even more. Also, we want to make sure the RSI is undervalued, and that's exactly what we've seen. It was trading for about a 36. Last time it was trading there was back in here, where we had this good move and then this good move, and so we had very, very high indication of getting really good buying pressure out of this, and that's exactly what we've seen. So now looking at the hourly here, what have we noticed? We've noticed the stock pretty much starting to pop off, right? It had this really good trend line, as you guys can see, where it hits this several times, getting good buying pressure. So now with the stock squeezing up, we're just continuing to hold this position in hopes what we actually see is this right here. Let's see if we can find it right here. This is what we call a golden cross. So this is where we have a lower moving average line. So this blue moving average line break up through the red. So hopefully we can see that in the next couple of days. That would be a very bullish thing for the stock to do. And then we're just keeping our stop loss just below this. So if I was just starting out with swing trading, I would focus on paper trading, drawing out trend lines, and working on indicators like moving average lines and RSI lines. All right, so Bone asked about Microsoft. So Microsoft, I haven't seen Microsoft stock here in a sec here. All right, so how do you feel about Microsoft reaching 445 mark? So right now it's trading for about 417. We do have this little decent, let's see here, the daily. All right. So this here isn't too bad, right? You guys can see the heavy amount of support here on the technical side. Hit that 200-day moving average line. It's popped up. Right now it's trading for about a 46. So we're kind of in this middle ground of where it's not overvalued, it's not undervalued. We possibly do have a little trend line like that. So for me, to answer that question of will it pop, will it hit 445? Well, it's hard to judge. So 445 would be right here. Let's draw that out. So 445 is in this range right there. So I do think if you're in on this position here, I would be hoping for this general trend to continue right there and for it to pop up. The only issue I see is on the hourly here, it's sold off down below that moving average line. So that's the only issue I see with this stock here. But Microsoft, though, it's a good play for the long term too. So even if you're holding it and it's selling off a little bit, for me, when I hold blue chip stocks like Microsoft, I have a very similar situation with Tesla. I have a higher probability just because I can hold it. I feel a little more comfortable holding it for a longer period of time. But to answer that question of will it... All right, I'm having a hard time wrapping my head around how 1, 2, 3% gains can grow an account when the stops are typically more than that. So what I mean by that, let's see here. So if you're consistent, let's pull it up. If you're consistent here with a, let's just say, let's see here. Let me look up all right, internal investment, $1,000. Weekly, we'll do monthly. We'll do 0. We'll do 1, or yeah, we'll do 2. Hold on, I'm pulling up. I have this. I'm trying to figure out a compound interest calculator here so I can kind of show you. If you have 2%. So what I mean by this here is it's hard to explain because that's a long-term investment. But so what I mean by this is when you're starting out trading and you're hitting 1, 2, 3%, if you can do that consistently, that's going to be where you make your money. It's not going to be off trying to, buy a stock at $1 and try to sell it for $30. You'll never find a stock like that. It's going to be very, very difficult to do that consistently. But what I mean by growing at 1 or 2 or 3% is when you're first starting out with $100 or $1,000, whatever it may be, whatever a small account to you is, you should feel comfortable taking profit at 1, 2, or 3%. A lot of people don't because they're looking at the profit. They're looking at, okay, well, if I have $1,000, maybe I only make $10 or $20, whatever it is. That's not much money. And I give you that, but what you need to realize is you have to just focus on long term. So those 1 or 2 or 3% will compound more. Your stop losses, typically more than that. So when you place a trade here, let's see here. So like with this one. All right, so this one here is a stock that's honestly kind of starting to go south. So what I mean by taking profit at those 1, 2, or 3%, when the gains, your stop losses are more than that, it should come down to your risk and reward. So if you're risking, if that's just say $1 to make $1, then that stop loss, if that makes sense. I'm honestly kind of more like, it's so hard to explain. Like, I don't know. You just got to be consistent. It sounds so crazy. It sounds crazy, but you just need to focus on small returns. You got to have good risk and reward. So anytime you place a trade, you should always be drawing this out. So boom, boom. So entering here. The only way you're going to like that. So let's see about here. So 3 to 1. So now, yeah, if the stock goes south, yeah, you're going to lose 1 or 2 or 3%, but you just got to be consistent with taking those profits, taking those gains. So, I mean, if that makes sense, I understand what you're saying about your stop loss is at 1, 2, or 3%. I think it just comes down, at least for me, to the risk and reward, risking $1 to make $2 or $3. And then, yeah, if I'm up 1 or 2 or 3%, you still have the good risk and reward. But if the stock is going south, then you can take your profit. I say it a lot because I want traders to feel comfortable taking profit at 1%, 2%. Most traders don't do that. That's the issue I see all the time. With Tesla here, found some nice support at about the 217, popping up to 219. Does have a little resistance at 222. I'm hoping we can get some sort of trend going in that direction. The general daily looks decent. It's kind of hugging below that 90-day moving average line, so hopefully we can get some buying pressure back up. But this one here we're up pretty good on, a couple bucks a share. We'll see what happens with this one though. But And then opportunity wise, I mean, like this CCEP kind of starting to go a little south here. You can see it dip down below the moving average lines. CPB stock has popped up, done very, very well. Just is there a way to take advantage of the full length of a golden cross till the lines cross again? I see the stock usually rise for a long time after a golden cross. Yeah, that's a strategy. A lot of traders will enter on the daily golden crosses. The issue with them is they could be a little more volatile. So like even with this one here, you can see the golden cross right here, right? Where that lower moving average line breaks up through that 200. So the 90 breaks up through the 200. Now, but when you entered this position, let's see, the stock is up here, right? So you could see that's a 9% sell off before we got that turnaround. So, you know, that does happen. That's the main issue with that, but it does work very good. It's just a little more risky. You can see even in here where I can't tell if it possibly crossed, definitely crossed here, but the issues with it's just a little more volatile when you look at it purely off that. I mean, the day or the hourly is a little different here. You could make trades just off that. Some traders do that too. But yeah. INTR selling off, not looking too great. This one here starting to get a little bit of some trend line support here, as you guys can see. Let's go ahead and see here, like such. So there could actually be a move from like 33, 34, and higher, trying to ride this trend out, for a possible break above the 200-day. That's a good thought on that one. Heavy support on this general trend here. I more used the golden crosses as just another indication, like another check off my list. So on that checklist, that you guys have, you guys could put in golden cross, or it could be just a different type of setup that you want. And I'll put those. Let me throw those journals in. Everybody always asks, so let me. But there we go, right here. All right, so I'll throw. Everybody asks about this right here. Let me throw that in. So this is the trading journal right there. I know a lot of you have it, but some people message me and they go, "Oh, I watched your live. What's the trading journal you talk about?" So I'll throw it in there for you guys. And then we also have, this is one of my stocks that I do have massive FOMO, with its MMYT. I've watched this stock just rally its way up, doing so good, breakout. Now it's above these moving average lines, just climbing its way up every day. Great trade. I mean, 85 to 105, just getting in on that breakout here of the trend would have worked so well. Even on that confirmation of support here, boom, hit it. Great buying pressure there. And looking at some stocks here with some sort of potential, we got, let's see here, we got ticker symbol GERN. Let's see how this one looks. So I'll kind of show you guys how I evaluate a stock relatively quick here. So I trend line like that. Another one possibly like this. So you can see has a short-term general downward trend, which I'm not a huge fan of. What I seek out is a stock on an upward trend that is sold off down to some level of support. Yes, we do have a long-term upward trend, but it's hard when this stock in the past 1, 2, 3, 4, 5 months has seen sell-off. So I would stay away from that one. This one here, let's see, possibly maybe a little bit there, a little bit of a trend there. RSI is 44. Stay away from that. SNY, not too bad, right? Sold off, approaching the 90-day moving average line. RSI is at a 34, so not too shabby. And then we try to possibly draw out some trend lines. Okay, like that. I'll glance at the hourly. All right, so it's selling off. It pretty much your entry would be above the 200-day moving average line. And the reason I would say that is because you can see it hit it as support. So if you're wanting to get in on this type of stock, you're going to want to get in on the breakout above it. You can see where it's broken above the 90. So we'll probably stay away from that one. OSCR here, this one looking at the daily here, good trend line. You can see it hits it several times, establishing good support. It's a 34, 35 on the RSI, so not too bad, not too bad. And then we always look at lower time frames. So you can see here, this one you'd want, you know, pretty much getting in above here. So does consolidation mean buyers and sellers are exchanging stocks at a fair price? Consolidation means yes, the stock isn't getting buying pressure nor selling pressure. So it's just kind of starting to flatten out. It's kind of flattening out to figure out who's going to be in control, buyers or sellers. Then we got SW. Which one's this? SW. Westrock. I've never, for some reason. All right, this one here. RSI is at a 34. Possible. No. Trend line broke. You know, this would be an RSI play. PDO here. You can see this good upward trend, which is very important. I think we would probably need a little bit more sell-off here, probably down to like the 1330 mark. RSI is at a 31. The hourly, you can see it just gotten absolutely obliterated today. So for me, I'd want to try to get in on that 90-day, very similar to what we saw in here. So we would want to just throw an alert about right there. So if it does sell off, boom, we're notified. We can get in on that position at a good support line, which would also be very undervalued on the RSI. And yeah, this stock could tomorrow get good buying pressure, but it would just be one of those things where you can't buy at the peak bottom and you can't sell at the peak top. So I'm very well aware of that. First Solar here selling off down below these moving average lines. They're not too bad here, right? Not too shabby. RSI is at a 31. The only issue I see is it popped below that had its first full day under that 200-day moving average line. So technically 209 would be support. So yeah, I would stick away from this one. Let's see. TRMD. TRMD sold off like crazy. It's a 25 on the RSI. This one here, obviously, you guys can see it's just been stair-stepping its way down. That gap there. So the 1, 2, 3% gain thing is more about not being afraid to take small profits when the stock, yes, exactly. Because what I have a tendency of seeing is traders go, oh, I'm not going to take profit. It's only 1%. It's only 2%. I'm just going to hold this stock. I might as well hold it. I'm only up a little bit. When in reality, if you're up 1 or 2 or 3%, that's a good amount of money. And the only thing that's separating you from making more money is just your account size. So I'm telling you, if I'll pull. Let me see if I can find a trading calculator, because I've done this in the past. So if you start out with $100, see here, you take, let's just say 100 trades, typical risk 2%. Your risk is 4 to 1, even if it's 50%. So like right here, I mean, you can kind of see it a little better here. So so if that just say you start out with $100, you take 100 trades out of a year. Um, you risk 2% per trade, and you trade. Your risk and reward setup is 4-1, and your win loss ratio is 50%. Your total account here with 3% per trade gain per trade, your end of balance after 100 trade or after the 100 trades is going to be about $1,700 off $100. So yes, taking small profits ends in huge results. And obviously, if you now have $1,000, right, you can see where the compounding effect with a small amount of money really adds up. So even if it's 2-1, even if it's 2-1, that stuff adds up very, very fast. So that's what I'm saying. Focus on small returns. Focus on, like, you don't have to, when you enter a position, you should have a good risk and reward. Yeah, and if your stop loss is 2% down, but your target is at 8%, that's where you're going to make money, because if that just say you're right 50% and it pops up to that 8% mark, boom, you've made good money. If it pops up 1-2%, you're like, oh man, this thing's consolidating, maybe it fell below moving average line, we'll just hop out with 1%. Feel comfortable doing that. But yeah, and if you guys are watching, make sure you guys hit that like button, subscribe. Also, don't forget to check out our school swing trading masterclass, code Lions, 47% off. You guys would love it. STNG here, just getting absolutely obliterated. Let's see here, sold off. Yeah, see, like when a stock's been above these moving average lines for so long, establishing good support, and then it just been stair-stepping its way down like this, I'm not a huge fan. I mean, you can see here how like the breakout strategy works on the daily. You can see here the entry here, 69, stop, popped up to 75. That would be a little bit of a longer hold. It's very similar to what we look at. Do you have a different strategy for the $500 challenge, because the stakes a higher and you need every trade to be correct because your account is small? It's pretty much the same strategy. It looks like, I think we're getting, oh, there we go. We got, all right. I didn't have my live thing set up. But it's the same very similar strategy that I do. You'll notice like the stocks I trade with the small account is the same stocks that I normally buy with my larger account. The only issue I have with the $500 account is with every trade, I have to go heavy in. So meaning I'm going pretty much all in every time, where normally, if I have, let's just say hypothetical, if you have 50 grand in an account, you could go, okay, I'll go 10 grand in this, I'll go 10 grand in this. And so it kind of divvies up the risk a little bit better. So you're one really bad trade away from burning through it, but that's why you just got to choose quality. And normally I'm pretty good about it, to be honest. But yeah, good question though. This one here, not looking too good. I mean, I just kind of go through them, throughout the course of a day. Ooh, this one here, not too shabby. 36 on the RSI. Looks like possibly it announced something. Why did we get so much sell-off today? Down 13%. hourly. Oh my goodness, this thing has gotten crushed. You could see here with that doji, this could be a bullish candlestick. So if you, and this would be like a day trading type of play, entering at, you know, about here where we had that first green bullish candle, or you enter on the first bullish candle to break over, you know, the 715 area. Back when I used to day trade a lot, but day trading's so risky, man, guys. But yeah, those are more or less most of the stocks here that we see some sort of value in, that are on our scanner and all of that good stuff. But yeah, so you know, if I was just starting out swing trading, I know I titled that. I would focus on journaling, journal every trade. I threw my journal down in the chat there. I would journal every trade, figure out what type of trader you are, right? A trader, you know, when I first started out, I tried to copy everyone's strategy, and it's just very hard to copy trader strategy. So be experimental, right? Figure out what type of strategy you like, you understand what type of trader you are, whether you're, some of you guys may benefit from shorting, right? And some of you may like day trading. Just figure out what type of trader you want to be. Journal your trades so you can figure out what works, what doesn't, and then, you know, just start that process of learning as much as you can, you know, taking courses, check out our course, reading books, watching live streams, all that stuff really helps. If day trading is so risky, why don't more people gravitate to swing trading? You know, I think day trading, it is more risky, but I know you can make a lot of money off it. You know, there's a lot of traders that do very well. I think the bigger issue with day trading is often you're getting in on positions like, let me see if I can show you one. So like you get in on these very high risk trades. So MRM. I'll kind of show you an example of one. So you really don't pay attention to the daily. You don't pay attention to the monthly, yearly. You literally look. This one's hard. This is not a. You look at like pre-market gappers here. Let me see. And you're trying to find maybe wave. But why a lot of people day trade is because, yeah, you can make a good amount of money off it. So something like this would be a stock you could day trade. I mean, no, not really. What I used to do is I would find stocks that gapped up pre-market. So, and then you'd get in on the breakout of that. So pre-market movers. Let's see if there was any today. All right. So today we saw Wolf W. So yeah, so something like this here. This is literally the strategy I used to do. You see the heavy amount of resistance it has pre-market. So in this gray area. So you can see it hits it. A lot of great buying pressure. You would get in on the breakout of this, and literally you'd be holding it for 2 minutes, 3 minutes. And this 1 minute return is 6%. So that's why people day trade, is because it has crazy returns. It's just very risky. Oh, wait, you're right. Okay. You can see this crazy return rate here. So heavy resistance, boom, boom, boom. You get in on that breakout. The stock pops up 6%. Normally you'd want to sell on the first candlestick to break under, you know, so you'd be in, continuing to hold, you'd sell about right here. So you'd get in, you'd make good money off it, but it's just risky. You know, it's just risky. And it's one of those things where you can make good money off it. But I think a lot of people don't really know of swing trading. They think the only way you can trade is to be in and out of position super, super fast, and you got to day trade. A lot of people, I think, why they don't trade is because they don't know of swing trading. They never heard of it. And yeah, I mean, that's what I think. But yeah, so you can see though. And then normally you could even do like 5-minute breakouts, stuff like that. Trying to find supports, you know. But yeah, something like that. So, but yeah, so we'll end it here though, guys. I hope you guys all enjoyed this. If you did, hit that like button. Casper asked, "Do you trade forex?" I don't. I know a lot of people do. Just never was attracted to it. But you know, I hope you guys all enjoyed this. If you did, yeah, day trading makes swing and long-term trading look boring by comparison. Absolutely. You know, I think that is why day traders day trade. They love the gamble. They love the stakes. You can turn $100 into $500 very fast, but it's just so much more risk. And I did it. I tried it. Wasn't a fan, so I seeked out swing trading, and it's been great. I mean, you guys are more than welcome to day trade. I hope everybody try it and figure out what type of trader you are. You know, I just seeked out swing trading because it's a lot easier for me. I can do it with YouTube. I can, you know, all that. I think day trading and that is just a little risky. But all right, guys, I hope you guys all enjoyed this. If you guys did, hit the like button, subscribe. We'll see you guys in the next one. Peace. Take care, everyone.